Hey guys, the B-Dance here. We, we wanted to put out a new video for you talking about the fraud and scam in tax resolution industry. And besides that, we want to talk about the aggressive marketing strategies of employee retention credit. And clients have been bombarded with the messaging and advertising and aggressive advertising for employee retention credits especially. So we want to break down some information asymmetry and help our viewers understand the dangers of picking the wrong company to help you with your tax problem, and how you can ensure that you're working with a legitimate company that's not just taking your money but actually really is invested and wants to help you. And we have Dan with us today, and he will help us understand the confusion that clients feel to make sense of all this messy and aggressive advertising.
Yeah, you're absolutely true because came recently from Ukraine, and I doesn't understand everything because I try to get some information in internet, but it's just so confusing. I mean, can you tell me about what the tax resolution and employee retention credit, because I don't know, it's so hard to understand.
Yeah, so tax. So you can tell, when people come from another country like Ukraine, and the United States has a worldwide tax system, and then one of the first things, so when people come to this country, they know that this country really is that this country takes paying taxes serious. So when people like then come, is like, okay, I come into the country, what are my tax obligations? How do I make sense of that all?
Yes,
And so they are trying to understand basic tax obligations as immigrants to this country. But besides that, then they hear some advertising about employee retention credits and tax resolution, and like, what's this? I mean, they don't understand the basic tax system, and now these tax credits and tax resolution. So what tax resolution is, it's it's the mechanism if the individual company owes money to the tax government and they didn't file for multiple years and they have back taxes, and then they want to settle it with the IRS, with the tax authority, or with the state tax authority or municipal tax authority. So they want to figure out the way to remove the penalties and interest, and the way to decrease their tax liability. And usually they are looking for some company to help them with that. But then the because of the information asymmetry, they are being approached by these unscrupulous and unethical companies. They promise to solve a case for them, but then some of these companies just take people's money and they never work on the case. So the goal is to help our viewers understand how they can check if the company is legitimate, to make sure that they don't get into the hands of the fraudsters and scammers.
how exactly you can be sure?
So one way to check it, so if you work with a professional, you have to you go and you type CPA verify or CPA check.
What is CPA?
Yeah, so like CPA is certified public accountant, is the professional,
Oh, okay. Yeah.
is a certified licensed accountant. But you must check if this person is truly a licensed CPA or just claims to be licensed CPA. So if you Google CPA verify. You just Google CPA verify,
Yeah.
and then it will take you have to enter this person's last name. You enter the person's last name, and then you click accept terms and conditions. If this person is truly licensed, that person will pop up in the system. Will say license in New York, license number such and such, and the license is active.
Like you just
Yeah.
type in the internet Google, like
Yeah, you do CPA
person
verify.
name,
You
yeah.
do CPA verify, and then you it will ask you to enter CPA's last name. You will enter, and then you accept terms of condition. And if he is truly licensed, his name will pop up in the
Okay,
system.
Yeah, I see.
And then it's also like reading reviews about this company online, and seeing what other people have to say about working with this company. So that's another way to check. And then especially when you go and schedule a meeting with this professional by Zoom or in person, it's being prepared and asking really good questions. Say, how many clients did you work before? How were you
Right.
able to help these clients? In what states did you work? In what industry? Ask a lot of probing questions, because if this person really knows what he's talking about, you will feel it as a result of asking these probing questions. So first of all, do a general background research, see if they are truly licensed, then read the customer reviews, then if that's okay, schedule a Zoom or in-person meeting and ask really good probing questions to make sure that they truly have experience in this area. And then you will have a feel if it's a legitimate company or not.
Yeah, okay. If you already found the license accountant,
Accountant,
yeah. Do you sign with him like a contract or something?
Yeah, you sign an agreement with the professional. It's very important to read it carefully, especially about contingencies, meaning if something goes wrong, what happens.
Yeah.
So that if to make sure if this professional, like, so for example, for employee retention credits, a lot of aggressive marketers over there advertise as if any company qualifies, even though you got to do research of facts and circumstances to see if they truly qualify. What a lot of these aggressive marketers don't tell people is that they can, even if the company receives employee retention credit, then 2 years or 3 years or 5 years down the road, the IRS can audit them. And if during the audit they find that the company was actually not eligible for these credits, this company will have to pay this money back to the IRS. So imagine this scenario: your company qualifies for $200,000, and then some of these aggressive marketers would charge 30%, which is 30% fee for their work to prepare the case, to file the case with the IRS. So the company will pay $60,000 to these professionals to handle the case. Then imagine 3 years down the road, the IRS audits your company and say, you know what, we decided that actually you were not eligible for the credit. Then your company will have to pay $200,000 back to the IRS. But you are $60,000 in the hole because you paid the professional and you thought that your company would get to keep that money, but you don't. And now imagine that you cannot find these people anymore. They disappeared somehow.
Yeah.
And you see, unfortunately, in tax resolution company, average life is 2 years. A lot of companies closed down, especially in Southern California, because they were just scamming and defrauding people. And you can you can Google dead tax resolution companies, and you'll find a list of many companies that closed in the last 2 years, 59% of them in Southern California. And so you can read about different cases of these companies defrauding and scamming people, and then just going bust and disappearing. So imagine if that happens with the company, this company went busting out of the business and doesn't provide services anymore, and then you paid 60,000, you cannot find them. What do? You have to find somebody else to help you clear all this mess.
To do
And
work, yeah.
And then imagine you have to pay 20,000 to clear this mess. So now your company would be 80,000 in the hole. So that's what these aggressive marketers don't tell people the truth. They say, "Oh, you're qualified. This is just free money from the government," but they don't talk about possible audits down the road. So going to your point about the agreement, about the contract, make sure they say what happens if the IRS audits your company. And then are they going to be there for you and defending you during that audit? You see, in our company, it's called the bee dance. So bees are the pollinators. And the big thing with the pollinators is, since there is a shortage of the pollinators, we must defend and protect the pollinators. So defend and protect are the keywords. So our role in this company is to defend and protect companies' assets and companies' income, to resolve tax situation and get tax credits for them, that they will be much better off than they were before working with us. So if our motto here is defend and protect the pollinators and defend and protect client income and assets, then it's imperative for us to provide guarantees for the client in our agreement, to have a paragraph to say if the audit does happen, we are going to be there by your side, defending and protecting you, so to maximize the chances that you will win the case in case of an audit. And we do have a lawyer on our team admitted to the U.S. tax court. So that's a part of your risk management strategy, because if you work just with CPAs, they may not be aware of they cannot help you with the legal remedies through the courts. So I am a CPA, I cannot go and fight for you in the court. I just don't have competencies for that. I'm not a lawyer. But my wife is a lawyer admitted to the US tax court. So if I cannot help you through administrative remedies through the IRS, and if we have to go to the tax court, then my wife would represent you in the tax court. So we can help you either through administrative remedies or, if necessary, through the tax court. But it's very important to read the contract carefully and ask questions. What happens in case the IRS audits me and asks me to pay the money back? It's very, very big question there.
Yeah, okay. Let's say I ask you that question. I mean, what's the main difference between two legitimate companies that try to help people, but one company go out from business in 2 years, and another one goes for 10, 15 and more. What's the difference? How do I
How do you assess that, right?
I think so, yeah.
Yeah, so effectively when the bee finds a source of nectar, she comes back to the other bees and does a wiggle dance. That wiggle dance shows the distance, trajectory, and the direction in which the other bees must fly to get to that nectar. So that's how they communicate, via dance. So bee name a company the bee dance. But then there is another phenomenon called dance of a deceived bee. So often when the bees fly through the caves and different apertures, they may record the information based on their visual perception and not on the actual distance. So imagine a scenario: this bee comes to the other bees and she recorded the information based on visual perception, not reflecting the actual distances and trajectory to the source of honey. So then other bees would say, okay, we got the, based on this wiggle dance, we think this is where we should be going.
Yeah.
But because she misperceived directions based on her sight, then they end up in a totally different place. So it's called a dance of a deceived bee. So the question is, essentially you're asking a question: how the client makes sure that they don't get advised by the consultant, who is actually whose advice results in a dance of a deceived bee. So ultimately it's about risk management. That's why cross-disciplinary teams are so important. If it's just CPAs for big cases like this, you may want a lawyer too, precisely for mitigating your risks. And then I said you check, you verify the lawyer in the system, you also run the same, you verify the CPA in the system, you also verify lawyers in the same way. You write lawyer verify, and then you type the lawyer's name and is the state in which they are licensed, and you click search, and if they are truly licensed, you will see them in the system, and their license should be active. So you verify lawyers like that too. So if you do work with CPA and a lawyer on your case to get credits or resolve your taxes, you should watch for red flags. Because you see, if people show you something, you'd better believe it. Because if you don't believe it, like if you give them the benefit of the doubt, then you may be taking too much risk, and ultimately like, oh, I thought that something was iffy, but I gave him the benefit of the doubt, I didn't probe enough. You don't want the situation, you want to probe right away. And if something bothers you on the gut level and you see some red flags, you've got to pay attention to that. So, for example, if you found some misleading information or lies when the professional answers to you, then if he is lying about this thing, what guarantee do you have that he is not misleading you about something else?
He's gonna lie again.
Yeah. So it's like paying attention to these red flags. Or for example, you're on the phone and you're like, "Hey, can we have a Zoom meeting?" And they're like, "No, it's against a company policy."
What?
Then that would be a red flag, because if a legitimate professional says, "Sure, of course, we can do a Zoom meeting. You can come to my office." It's all fair game. If somebody says, "Oh, we talk with people only over their phone," and they refuse to meet with you and see their face, I mean, that would be a red flag right there. So it's like paying attention to red flags like that. Verify the licenses, read client reviews, and read the contract carefully, and make sure you really understand everything. If you don't understand something, say, "Hey, I don't understand this paragraph." Or say, "Hey, can we change this paragraph here?" Be like very engaged in the whole process. So the Latin expression is caveat emptor, which means customer beware. So even though in a lot of states is venditor, it's caveat venditor. It's more of the burden is on the seller of the services in a lot of states in order to protect the consumer. But still, the buyer should do his due diligence too and make sure he is not getting into the situation where he is being taken advantage of, or he got himself into the situation where the consultant engaged this person into a dance of a deceived bee, so to speak.
Yeah, I see. What exactly happens when you lose the case? I don't know. Maybe I actually did some bad things or mistakes and the case is lost. What should I do then?
You mean if you made some mistakes on your tax returns
Yeah.
and yeah, so you see like the
Because
idea.
there's a risk, not 100% cases wins, right?
Yeah. Yeah, so we see, so in tax resolution you have 5 different remedies. The most ideal scenario for you would be to qualify for the offering compromise. But cases like that are hard to get. Perhaps 20% or so cases can qualify for the offering compromise. And the way offering compromise came about, it was the result of the IRS Reform and Restructuring Act, July 22nd, 1998. Bill Clinton's administration signed that into the law, which seriously expanded the rights of the taxpayers and given them enhanced way for the offering compromise. But in order to qualify for the offering compromise, you must show your assets and your disposable income, and in total that is called reasonable collection potential. So the IRS must make sure that your reasonable collection potential is low enough to qualify you for that offering compromise, which is a legal agreement between you and the IRS to lower your tax liability. IRS is not a charity. It's not going to give discounts to people nilly-willy. That's why it's a very serious process, and as I said, perhaps 20% of clients would qualify for that. In other cases, there are four other tools we can use. So imagine you don't ultimately qualify, your offer is not accepted. Then we could do partial installment agreement, which is also called as the backdoor offering a compromise. And then you have installment agreement, which is the plan with the IRS where you freeze the penalties and interest, and then you pay it over a period of usually 72 months. And then you can go penalty reduction route, and there are like 150 different penalties and different ways to abate them. And then there is C&C, which means currently not collectible. If somebody's income is so low, some person is on Social Security, and there is no way they can pay, we can put it in the currently non-collectible status. If the situation of this person improves and they have additional income, then yes, the IRS will want them to pay. But it's called currently, in the current situations, it's not collectible. So you see, we have five tools to help the client. So if one doesn't work, we can try another one. And then, as I said, if I cannot help you through administrative remedies with the IRS, then we can pursue the tax court options, because we talk about the positions of the taxpayer and the tax authority. So if the IRS and the taxpayer have disagreement about the position of the tax return, then in case of that disagreement can be litigated in the court. And my wife is a lawyer, including with the admission to the U.S. tax court, and she can litigate the case on the client's behalf. What often happens is when the client submits the case into the tax court, then it really raises the stakes for the IRS. They start negotiating totally different, because usually they don't want to spend money on the expensive litigation process. So they normally settle it before it even goes into trial. So there are different. So offering compromise is the ideal scenario, but not everybody qualifies for that. That's why we have other tools we can use that can help the taxpayer. So our idea is to really be there for the client and really build value for the client, because if the client is bleeding, what value generation are we talking about? The idea is to put the band-aid to stop the bleeding, because if the IRS put liens on the property or garnishing 75% of paycheck, the client is actively bleeding, we got to stop the bleed before we can talk about generating value for the client's business and things like that.
I see. Yeah, you seems to know your stuff. I couldn't imagine myself know so much. Yeah, it's pretty much confusing even now, but I think some of stuff it's already, yeah, I understand it. So
Yeah, you
thank
see,
you.
so you see, it's like then help us see it's very confusing for the client to deal with all this barrage of information. Is information asymmetry. So really good professionals help the client break the information asymmetry. Say educate the client, empower the client to make well-informed choices that will benefit the client in the long run, not just benefit the professional. They got the money and they left the client to fend for themselves, but really be there with the client through the entirety of that be dance, so to speak, and truly lead them to the source of honey, to the source of it, to that honeycomb, to replace worry, anxiety, sleepless nights with the sweetness of that with the sweetness of the honeycomb, meaning with the
Yeah.
peace of mind, getting back to the quality of life that clients truly deserve. Yeah. So thank you for listening to us today. We hope it was informative for you, and we're available to take any questions you have. Our phone line is always open for you. 929-399-9349. 929-399-9349. And at the end of this video, we'll put the verification links where you can verify if this professional is a CPA and if this professional is a lawyer, so that you can use it in your own due diligence. Thanks so much, and cool bees.